Today in crypto, I discuss my biggest fear in the markets right now and how I am reacting with my portfolio to this. I look at the latest analysis on Bitcoin and check in on small coins that we have been keeping our eyes on recently. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. Okay, so let's start off by talking about Bitcoin. We still have not had any significant price move for BTC, but we are nearing the end of that triangle that we have been keeping our eyes on, so we could be in for some volatility coming here very soon. On the 4-hour time frame, both the 50 and the 200 period moving averages are trending downwards, and of course the price is below both those, showing shorter term weakness in the market. Now, something interesting was that today, the Shanghai Composite fell by 3%. Bitcoin also fell at around the same time, showing a very interesting correlation to the Chinese markets. Remember, China is one of the key markets for Bitcoin. Even if it is all a black market for Bitcoin in China, it is still a key market. Also, Bitcoin just hit a new all-time high correlation to the S&P 500 the other day, with a near 0.8 out of a possible 1.0, which would be equal to identical correlation if it ever did hit 1. That's also the Bitcoin Fear and Greed Index is at 41 right now, showing that investors remain quite uncertain about the market overall, with a disposition towards pessimism in the short term. Well, Bitcoin has really hardly moved over the past couple of days. The reaction of any move by Bitcoin has been very, very dramatic. So Bitcoin went down 2% yesterday, which is nothing. That's nothing for Bitcoin. But a lot of altcoins reacted very harshly. Cardano dropped by 8% versus Bitcoin during the same time frame. Just as an example, there's lots of others you can give that are even more dramatic, showing that many people are quick to leave altcoins and run back to the safety of Bitcoin if they think the market is going to go down. So every little move right now by Bitcoin sends panic through the market, with people thinking, that's it, this is it, the party is over, it's all going down. But at this time, the party is indeed not over. And speaking of Cardano, it could be looking at some more bullish momentum as we do move closer to the Shelly hard fork in 2 weeks, with the chart currently forming a bullish pennant, which is a continuation pattern, which could see the price continuing upwards in the short term. Tezos sadly got rejected at that descending line of resistance dating back to February. Now, we could still see a turnaround here, but my stop losses have been moved up on Tezos just in case that is the end of the trend. Now, checking out Stellar Lumens, it is continuing its bullish push higher, now up significantly since Rect Capital shared it in issue 1 of the newsletter last week. We did see some good bullish accumulation under the 1,000 Satoshi area. The next significant area of resistance, it is still way up overhead. So I'm still long on Stellar Lumens right now. By the way, Samsung Galaxy smartphones, they announced that they now support the Stellar blockchain, which is definitely awesome to see. And of course, we gotta remember Acon's cryptocurrencies running on Stellar Lumens, so it's great to see that integration for a wider range of smartphones for more access for people in the regions that need it. A big thank you to Crypto.com for sponsoring today's episode. The next syndicate event will be offering 50% off of Kyber Network on the 21st of July. You will, as usual, need CRO staked to be able to participate in that offer. Also, great news for New Zealanders. New Zealand! Yes, they mentioned us. So, the Crypto.com Pay gift card is now available in New Zealand. So you can shop online at shops like the App Store or JB Hi-Fi or Kobo or David Jones and enjoy up to 2x pay rewards, which is pretty gosh darn sweet. And of course, if you want to get your hands on one of the uber popular Crypto.com debit cards, they are now shipping to the USA, the UK, the EU, Singapore, Taiwan, Philippines, New Zealand, Australia, and soon coming to Canada. Now you can enjoy generous cashback bonuses with one of these cards. For example, 3% with the Jade Green card, which I have here in my hand, as well as getting free Netflix, free Spotify, airport lounge access for when the world economy opens back up one of these days, and of course, premium lending rates in the app. And as a special bonus, if you sign up for a Ruby Red tier card or higher using the link down below in the description, then you will get a $50 bonus in free cryptocurrency credited to your account. Okay, so let's move on to the second half of today's video. I wanted to talk about what is my biggest fear in the market right now. What, dude? I came here for hopium, man. Don't ruin my buzz with bad news. Relax, Stoner Lark. It's gonna be okay. I want to be clear. This is not intended to be fun or to scare you. Far from it. As investors, we must always be soberly aware of any risks in the market. Well, it is certainly more fun to always think about the upside and how hilariously rich we're all going to get by investing in cryptocurrencies. We ignore the downsides at our own peril. Protecting your capital, it is as important, if not more important, than making gains. So what is my biggest fear in the market right now? Well, of course, it has got to be the state of the global economy. You see, the global economy has experienced 14 recessions since 1870, when they really started paying attention to the numbers. And the one that we are in right now, it is the worst one since World War II. So it's kind of a big deal worth paying attention to. Now, in 2020, we are seeing the highest share of economies which will experience contractions in annual per capita GDP since 1870, which again is basically when they started counting the numbers, which for reference is 90% higher than the proportion at the height of the Great Depression. That's massive. There are also many indicators of global activity which are expected to see their sharpest contractions in 6 decades. This, of course, is because of the huge amounts of services that have basically come to a grinding halt almost overnight as response to the crisis. We're talking retail, restaurants, hotels, airlines, cruises, tourism, cinemas, theaters, sporting events, all of this stuff, boom, just stopped. Now this is of course due to both regulatory restrictions and of course people simply choosing to avoid going to places like this due to fears of infection. This chart shows retail sales volume during the global recessions. You can see it's quite dramatic. Then we have data about emerging markets and developing economies, the majority of which will experience the lowest growth in at least 60 years. Now, 5 out of 6 of these countries will enter recessions. The effects of this mean that 1.5 billion of our fellow humans, people like you and me, stand on the precipice of losing everything in these developing economies. The human misery as a result of this is going to be unimaginably brutal. In more developed economies like the USA, 40% of small businesses will be shut permanently. 1 in 3 renters in the United States could be evicted in just a few weeks, and millions of jobs, they're simply never going to come back. Yes, countries like New Zealand and South Korea and Taiwan, they have proven that aggressively confronting this crisis head on can result in powerful positive results and a quick bounce back, at least internally, of your economic activity. Since the nature of the current crisis, it's quite unique in its way, so we can have a quick bounce back even though the drop was quite dramatic. But we must realize that with so many countries in recession, that a slower recovery moving forward into 2021, that is the most likely outcome, since even if things do get back to business as usual quite quickly, we still must deal with the reality of many people still being afraid to splash out on extravagance like holidays, savings being impacted, investment opportunities being impacted, businesses being impacted for long term. This is going to have long-term effects. Now, on the flip side, to all of these grim statistics, monetary policy has eased dramatically around the world in response to the crisis. Well over $10 trillion, probably, it's probably closer to 20 trillion now, but hey, who's counting? Well, 20 trillion between friends, no big deal, right? Anyway, Interest rate cuts, liquidity injections, asset purchases, and a whole range of other financial tools, they have all been deployed by central banks to stop the worst of the bleeding. And in many countries, these actions have actually had quite successful results by supporting the livelihoods of average citizens and, of course, by preventing large-scale bankruptcies. Countries which have focused on helping regular citizens, bailing out the regular people, they will recover much, much quicker. Countries which have focused on protecting profits for elites, they're probably going to face a tougher economic reality, as it is a situation which will compound on itself in a negative feedback loop. But in spite of the rather grim economic realities, equity markets, man, equity markets, they have been on fire recently. It's been crazy. This total disconnect has resulted in excessive risk-taking by investors and is a significant vulnerability that investors really, really need to be aware of, because in spite of the short-term boom, 10-year yields on U.S. Treasuries, they are still heading down. Public debt is projected to reach this year the highest level in recorded history in relation to GDP, and that number is not going to get any better anytime soon. This is both in advanced and emerging and developing economies. Also, negative rates are likely to become really just the norm in more and more countries. We already have these in many European countries. That's likely to spread, forcing you, of course, to either spend your money or lose 1 or 2% a year of your savings via negative rates. Global output is projected to decline by 4.9% in 2020, and of course, geopolitical and trade tensions could damage already shaky global relationships at a time when trade is projected to collapse by around 12%. All of which, of course, just spells trouble in the midterm for equity markets. Now, as crypto investors, we of course need to be keenly aware of the risks in the wider macro sense in the markets, and that these risks can tank the markets very, very quickly. Because if you remember, what was one of the first things that I talked about in this video today, and of course I've been talking about a lot recently, the record high correlation of Bitcoin to the S&P 500. Stock investors also should be keenly aware of these macroeconomic situations. I know a lot of you invested in crypto and in stocks like me, so do be aware of that as well. Now, does this change my investment thesis on cryptocurrency? Not really. I will continue to average into positions in Bitcoin and Ethereum every week, just like I have been for a long time, as well as averaging into stocks. I am taking a long-term view on my investments. These short to mid-term situations don't worry me that much. In fact, I'm working on a video right now laying out my 10-year investment plan for you guys, so you can kind of get an insight onto how to think about this in general. So stay tuned for that. That'll be coming out maybe next week or something. But I do, at this time, though, maintain a bigger cash position now than at any previous time in my investing journey. Now, does this mean that I'm going to miss out on some opportunities by not being fully deployed in the market all the time? Yeah, it will. That's okay. But it also means that I'm protecting my downside if the markets crash hard, and that I have funds to actually be able to buy the dip if that does happen. And if the market, becomes irrational for a very, very long time, then I have enough money to be able to ride it out without needing to actually sell my long-term positions. Because as investors, we must always remember, make hay when the sun is shining like it is shining now in the markets. Even if those sunlight hours are being paid for by the Federal Reserve, it is what it is, and you have to make of it what you can. But also, you need, as an investor, to be planning for rainy days. No one can predict the future of the markets, which is why I'm always dollar cost averaging in, maintaining those positions as they are, and of course, always trying to remind myself and to remind you guys to book in those profits and make sure that you're actually making realized gains in your investments. Obviously, my hope is that the markets remain detached from reality and they just keep going up, 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 but we are sailing in uncertain seas and things can change very, very quickly in the markets, so you do need to be aware of that. Anyway, those are just my 2 Satoshis. Remember, knowledge is power, my friends. Anyway, your question for today: how are you feeling about this whole situation right now with the global economy? Do you think that the markets are going to stay detached from the economic realities that we're seeing on the ground right now? Or will all of this eventually catch up with us and be bad news bears for the markets? And if you are factoring this into your investments, how, if at all, have you adjusted your portfolio as a reaction to these ongoing situations? Let me know about it down below in the comment section. Thank you so much for tuning into today's video. As always, I hope you're having a freaking awesome day wherever you are and whatever you're doing. Long live the blockchain, and peace out till next time.